Hi, Nick here from Foenix Partners with the latest economic update. Today we're going to be discussing the three recent central bank meetings with one of our sales traders, Balraj. So, Balraj, why did we see sterling dollar drop into the 131 region last week?
Thank you, Nick. The reason why we saw the dollar strengthen last week was due to the FOMC meeting on Thursday evening, at which we saw the Fed increase interest rates from 1.75 to 2%. This was due to the relatively strong set of economic data coming out from the US. Inflation has held steady for the economy, unemployment is at record lows, and the labour market as a whole has proved resilient and robust to economic uncertainty and market fluctuations. The Fed went even so far to state they are thinking of 2 more additional rate hikes for the US this year, bringing the total to 4. It really does prove how much the US economy is outperforming its neighbouring partners.
Okay then, moving across to the Eurozone, why did we see the euro weaken when the central bank kept rates at 0% for the 15th month in a row? Why was that the case?
It's a tough one to answer, Nick. Last week, the ECB had their policy meeting just a day after the Fed. And on the back of that, they did obviously once again hold interest rates at 0%. However, they also shone a bit of light on what their monetary policy plans for the future are. They disclosed that they would continue their buyback program of 30 billion euros until September 2018. From September, they will halve that to 15 billion euros until the end of the year, where their QE program will cease. The euro, as a whole from this stage, took it quite positively and the euro did strengthen. However, Mario Draghi cannot just sit back and watch the euro charge higher. He then stated that the European Central Bank would not even look to increase interest rates until summer 2019. Which just shows how much of a snail's pace the Eurozone economy is recovering.
To round off, we saw sterling strengthen after the Bank of England meeting. Is that because an August rate hike is now on the cards?
Some people do feel like that actually, Nick. What we saw today was the Monetary Policy Committee hold interest rates at 0.5%. However, what really shook up sterling was the voting patterns from the Bank of England. They changed voting patterns from 7 to 2 to 6-3. The main person who shifted to the hawkish camp was Andy Haldane. He normally has quite a dovish tone on the monetary policy for the UK, so it is interesting to see what he has in store for the UK economy and what he expects the UK economy to be performing in the next month or so. Right now, what will form an August rate hike will be the latest inflation and wage figures. They could really determine if an August rate hike is on the cards or whether it's just another delay and the unreliable boyfriend pushes it back another quarter.
Okay, thank you Balraj, and thank you all for watching. Join us again soon for another market update.